another weekly market breakdown. Firstly, I want to say thank you for all the support that you guys have been giving the channel. I do appreciate it. And if you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the content, please smash the like button for the YouTube algorithm. And as always, just let me know what it is that you'd like me to cover in my next video. Now, today we are going to look at some Canadian pairs, and the reason for that is the Canadian dollar has been doing quite good. Firstly, the Canadian dollar came out 2 weeks ago, gave us a quarter basis point interest rate hike, which was good. And then they came back and they had 336,000 new jobs were created. The unemployment rate also dropped from 6.5% to 5.5%. Now, is the euro could learn something from what the Canadians are doing, but we're not here to speak about the world's worst currency. We're here to speak about the best performing currency, which is currently the Canadian dollar. So that is what we are going to focus on because that fundamental data for last week is just going to carry over into this week. And yeah, so ladies and gentlemen, without any further ado, let's get straight into it. Now we're going to start with the Euro cat. Now, if you start here on the monthly time frame, firstly, what we can see over here is we can see that the market had broken below this most recent structure. Now, this level over here acted as a strong level of support, and once support gets broken, it becomes resistance. We can also see if we look left, the market is currently testing strong level of support as we can see it now. Now, the one thing that you need to keep in mind is that even though our currency is doing quite well, there's always some profit taking place. So what that means basically is that we could definitely see a short pullback before the continuation to the downside, and that pullback is not because the euro is getting stronger against the cat, but because we have the biggest speculators in the market taking profit, and then the market slightly increases, and then you can see that a continuation to the downside. So they would then take profit at this level. We could see some profit taking to the upside, and then they will start selling it at a higher price just so that they can accumulate more profit, or just so that they can accumulate more revenue at the end of the day there as well. Now, if you drop down on the weekly time frame, the market structure is quite clear over here. I can see a base of last week's close. The market broke below this level of support, came to test it as resistance, and giving us a confirmation that the euro cat is currently in a bearish territory, and the euro has been doing quite bad. Also, we know that the euro came out not long ago, keeping the interest rate at zero. I also know that they are not planning to hike interest rates for the euro any time in the short term, so we can definitely expect the euro to decrease in value. And not just that, they are currently facing the highest inflation that you've currently seen there as well. Now, if you drop down here on the daily time frame, what do we see? Now, from a daily perspective, the first thing that we can see is the market is currently testing this previous level of support. Now, the market also printed an impulse. Now, after an impulse, you expect a correction before the continuation to the downside. Now, firstly, we need to take our Fibonacci there from the high to the low of this impulse. Now, if we can see over here, is that we obviously want the market to pull back to at least a 0.382 before we could before we could see that potential pullback to the downside. But one thing that I would like to see going into next week is for the market to create some sort of a structure first. So I'll definitely keep you guys up to date on this. So I'd like for the market to create some structure there first, and then basically what I would like to see is for the market to break below that structure and then start looking for potential selling opportunities. However, there's two ways that we are going to approach the situation. So what we are going to do is we're first going to, if the market continue the pullback, what we are going to do is we're going to wait for the market to pull back to this level over here, because the 61.8 is lining up perfectly with that structure before the continuation there to the downside as well. Excuse me. Alternatively, if all else fails and the euro and these hedge funds do not take profit, they don't start that profit taking process, then if we do get a clear daily break above this level on Monday, then we can definitely expect the market to continue lower. But I'm expecting some profit taking on this market because it's been quite oversold, as you can see at the moment. The next thing we've got is the GBP CAD. Now, you might see the similar price action between the GBP as well as the euro. Now, the GBP CAD is quite interesting because the GBP also saw some some interest rate hikes, and as a result of that, we saw some good bullish momentum for the couple of times that we've had it on here. So we can also see here from a weekly perspective, sorry, from a monthly perspective, this market had been stuck within this consolidation phase for quite some time. I could see how the market had been moving sideways. We had that fake out testing that equal low, then the market pulled back, came down, and it's been stuck within this consolidation phase there as well. I would ideally like to see the market break below this level, which will give us confirmation that we could look for long-term selling opportunities to the downside there as well. But as it is now, we could potentially see a pullback going into next week, so as traders we have to be reactive and not predictive. Now here on the weekly time frame, what do we see? We can see how the market printed this overextended information. After an overextended information, you expect a pullback to the left leg before the continuation to the downside. But again, like I said, going into next week, we can definitely expect that pullback. Also, the market printed that massive impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the high to the low of the massive impulse. But I can see how the 0.382 is lining up perfectly with this left leg of the information, giving us a confirmation that we can expect the market to pull back to that level before the continuation to the downside there as well. Now, if we drop down on the daily time frame, what do we see? Now, from a daily perspective, this was the loss structure that the market had created. Now, we could definitely see this market pull back. Going into next week before that continuation to the downside starts. Next up, what do we have? We've got CAD-JPY over here. Now, if you start here on the monthly time frame, firstly, we could see how the market is currently testing a strong level of resistance over here. Now, this signals us an indication that we could definitely expect the market to pull back before the continuation. The market had also printed this weird W formation. After a W formation, you expect to pull back to the neckline before the continuation to the upside there as well, because we obviously expected the CAD to increase in strength against the JPY. Now we're looking at data for the CAD-JPY. So you guys, if you are confused in terms of why we're looking for buys here and sells on the other side, here we're trading the CAD against the JPY, and on the other pairs that we looked at, we were trading, that given currency against the Canadian dollar as well. Going into next week, pullback is expected before the continuation to the upside. If you drop down on the weekly time frame, I think the price action is a lot more clearer over here. Now, firstly, like I said, from a monthly perspective, the market is currently testing that level over there. Now, we can also see that this was the most recent structure that the market had created. Firstly, we could see the market pull back to that level before the continuation to the upside, because this was also a structural level that the market had created. Alternatively, we could see a deeper retracement before the market moves to the upside there as well. Now, from a daily perspective, what do we see? Now, from the daily time frame, you can firstly see how the market printed this massive impulse. Now, after an impulse, you expect a correction, and the best way to measure that correction, is by taking your Fibonacci there from the low to the high of this massive impulse. Now, if you take your Fibonacci over there, firstly, you can see how the 0.382 is lining up perfectly with this structure, and if you extend it further to the left, you'll see this level over here acted as a level of resistance once, and it's currently testing as resistance here again. So a pullback is expected going into next week for the CAD before we start seeing that continuation to the upside, because we know that fundamental data drives the long-term momentum of the market, and technical analysis drives the short-term momentum of the market. Next thing we are going to look at is AUD CAD. Now, starting on the monthly time frame, what do we see? Now, here on the monthly time frame, we can currently see how the market is currently testing a strong level of resistance. Now, this level over here acted as a level of support. Support got broken, it became resistance. We can also see how the market printed this W formation, and not just that, also if you see this market print a candle with the long wick, you also expect the next candle to go and fill in the wick. But because we are still very far from this month, we cannot anticipate that is going to happen until we get a clear break. Until we get an actual close like this. But we can see the market here on the monthly printed this W formation as well. But we obviously can't wait for the market to go and come to the end of this month, so we're just going to look for the other opportunities there. Now, here on the weekly time frame, we also have this massive impulse. We had the correction, and if you take your Fibonacci from the low to the high over there, firstly, you can see over here we've got a 0.382 pullback sitting perfectly with this level of resistance that is now being tested as support, giving us a confirmation that we could potentially see the AUD CAD just start to take off from next month from a weekly perspective. Now, here on the here on the daily time frame, so just again, I don't want to confuse anyone, because on the daily time frame, from a weekly perspective, we obviously expect the AUD to get weaker against the CAD, right? So what we would like to see is for the market to break below this level, Then on the retest, look for a continuation to the downside. But here on the daily time frame, what do we see? Firstly, we can see how the market has just completed this information. After an information, you expect to pull back to the neckline before the continuation to the downside there as well. So there's a good possibility that we can, going into next week, again, see the market pull back to the neckline of the information before the continuation to the downside. So the best way that you are going to approach this market is to just wait for the market pull back to that level and then start looking for selling opportunities for the market to go and complete that information at the neckline from a daily perspective. Next up, we've got NZD CAT. Now starting here on the monthly time frame, what do we see? Firstly, we can see how the market is currently also testing a very strong level of resistance. This market over here acted as a level of support. Support got broken. It became support once again. Support then got broken. Resistance did not hold. The market broke above that, came to test it as support, broke below support. All of that supports once against resistance, giving us an indication we can definitely expect the market to move to the downside there as well. Now, from a weekly perspective, what do we see now? Yeah, on the weekly time frame, the price action is quite interesting. Firstly, we can see how the market created an equal high, giving us an indication that there's definitely a pullback expected in this market as well. The only problem that we got over here is the market had created structure over here as well. Now, this level over here also acted as a level of support. Support got broken, it became resistance. By definition, when the resistance got broken, all of that resistance then becomes support. But because we expect a bearish market, we expect the market to break below that level before the continuation to the downside there as well. Now, here from a daily perspective, we've got similar price action compared to the one that we just had on AUD CAT there as well. We can see how the market also printed this information. After the information, you expect to pull back to the neckline before the continuation to the downside. So we are going to approach the situation the same way over here. So going into next week, we are going to wait for the market to pull back to that neckline and start looking for selling opportunities for the market to go and complete that information at the neckline as we said over here. Next up, we do have gold. So starting here on the monthly time frame, it's quite clear that gold is currently testing a strong level of resistance. Gold had also printed this massive impulse and that correction, they never completed the next impulse. Also, if you take your Fibonacci there from the low to the high of that impulse, you can see how the market tested and rejected the 61.8. Now, if you pull back slightly, you can see that the minus 27 target had been reached. So we can definitely start looking for a new short-term target in the market there as well. Now, from a weekly perspective, what do we have? We can firstly see how this level over here acted as a strong level of support. So resistance, all of that resistance got broken, and we can definitely expect the market to pull back slightly before the continuation to the upside there from a weekly perspective. On the daily time frame, what do we have? Now, the price action on the daily time frame is a bit different over here. Now, there's two ways that we are going to approach the situation, right? We had this impulse and that correction. If you take your Fibonacci there from the low to the high, you can see how gold had tested and rejected the 61.8 as well. So there's two ways that we can approach this because there's a contradiction between the weekly and the daily. Now, the weekly level of support that we expect the market to test sits at this level over here. However, we can see from a daily perspective, the market broke above this level of resistance, came to test it as support, giving us an indication we can definitely expect that continuation to the upside. However, the market had created this small little consolidation phase over here. And as traders, we have to be reactive and not predictive and learn to adapt to the ever-changing market environment. Going into next week, we could potentially see gold just take off from where it is now. So if you take your Fibonacci there from the low to the high, and this would be the take profit level at the minus 27 of the Fibonacci taken on that daily correction leg there as well. Alternatively, if gold does give us a clear break below this level over here, if you do break and close below, then we can expect gold to go and test that level first before the continuation to the upside. So it's very important that you monitor the price action, how the price action develops from a lower time frame to understand whether it's a good time to get into this market or not. Next up, we do have the Nasdaq 100, and starting on the monthly time frame, the Nasdaq is quite in bullish territory over here. Firstly, this is the target that we are going to expect the Nasdaq to come and test. Now, I've spoken about the Nasdaq when the price is sitting at this level, explaining all of the reasons why we can expect that move to the downside there as well. Firstly, this was the last level of support that got broken, and when support gets broken, becomes resistance, giving us an indication the Nasdaq is quite bearish. We can expect that move to the downside to take place here as well. From a weekly perspective, the market broke that level of support, came back to test it as resistance. It's now testing a equal low or a previous level of support, so we can definitely expect a slight pullback before the continuation to the downside. Beyond the daily time frame, what do we see? Firstly, we can see this was the last level of support that the market had created apart from this structural level over here. Going into next week, there's two ways that we can approach the situation. Is we can expect the market to continue slightly lower, pull back, and then go and hit that previous level of support that would be turned resistance. Alternatively, if the market does break this level, then you know it's time for us to adapt to the ever-changing market environment there as well. So that's the two ways that we are going to approach the Nasdaq 100. Unfortunately for me, I got into a sell right there when the fake news came out. Excuse me, when the speculation started coming out there as well. So I'm still holding these selling positions, guys. That's all that we have for our watch list for today. I want to say thank you so much for the support. Thank you for your time. And if you enjoyed the video, please smash the like button. And as always, cheers for ears.